In this week's episode, we look at the latest movements in the African grain markets and also discuss the factors driving these prices. All in this week's episode, so make sure to stay tuned. Hello, Dr. Johnny van der Merwe here, and a warm welcome to another episode of the African Agri Overview, thanks to the support of Fieldnet Pivot Watch and Collateral Management International. Join the excitement around Fieldnet Pivot Watch. Experience unmatched monitoring of any pivot, anytime, anywhere, offering complete peace of mind on your farm. Fieldnet Pivot Watch is not only cost-effective but also time-saving. Ready to transform your irrigation? Contact your nearest Zimmatic dealer for a quote on Fieldnet Pivot Watch now. Collateral Management International, or CMI, operates across the continent to manage and control commodities financed by financial institutions. With over a decade of experience, CMI is known for top-tier storage standards and trusted staff. They specialize in collateral management, commodity storage, stock monitoring, and inspection services, balancing security and operational value for banks and clients. CMI, your leading collateral manager in Africa. But with that, let's jump straight into the latest news on the grain markets.
Good day. This week we look at the Zimbabwe maize market and in particular ask how the lower South African maize crop forecast could potentially influence flows to Zimbabwe. Before we continue, take note. Zimbabwe is a rather challenging market to analyze with very little accurate statistics, regular inflated government crop forecasts, and frequent government involvement in markets. Let's recap our S&D forecast for the 2024-25 marketing year, running from May 2024 to April 2025. Very little has changed since our previous podcast in July. Most crop forecasts around 600,000 tonnes and annual consumption estimates in the region of 1.8 to 2 million tonnes, which is below last year as we expect some substitution with other more affordable food commodities as maize meal is relatively expensive. We foresee an import need of around 1.2 million tonnes, which should mostly be imported from South Africa. South African yellow maize landing in Harare at a $80 per tonne discount to the local maize price, and we expect Zimbabwe likely to import its entire feed need. The market guess 400 to 500,000 tonnes annually, mainly from South Africa in the form of yellow maize. This leaves a 700 to 800,000 tonne white maize import need for the food industry. Since May, Zimbabwe has imported 100,000 tonnes of maize on average per month from South Africa, split 65-35 between white maize and yellow maize. As indicated on the graph, the market of the opinion this import trend should continue at least until March-April next year, before slowing. That said, we are aware of potential US white maize and yellow maize import speculation. It could be as much as 50,000 tonnes each for white maize and yellow maize from November to February at competitive price levels, in line or even slightly below South African import parity. This table indicates our South African S&D forecast for the 2024-25 marketing year. It is a tight balance sheet given the South African context, with ending stocks around 1 million tonnes. We have penciled in exports of 2.4 million tonnes, with almost half destined for Zimbabwe. It does look as if South Africa should be able to meet Zimbabwe's import need. The next graph shows price history of Zimbabwe maize and South African white maize import parity since January 2020. Since March 2023, when the current import campaign commenced, Zimbabwe maize prices followed South African white maize import parity as one would expect. See the blue circle. This trend should continue at least until March-April 2025. The Harare price currently trading at around $435 a tonne, in line with South African white maize import parity. South African yellow maize landing in Harare at around $355 a tonne. See the red line. So, the question is, where the South African white maize price is heading. rather difficult to answer. However, given the relatively tight South African balance sheet, the JSE white maize contracts for the current season likely to remain firm until at least December, January. After that, it becomes a weather market, which has a significant influence on new crop contracts, but also influence late old crop contracts such as March. Favorable growing conditions, pressure prices, and less favorable conditions, price supportive. Also, the extent of early deliveries from April, which is expected to be above normal, should play an important part in price determination. The JSE white maize contracts trading in strong backwardation from December onwards, indicating to at least normal new crop supply expectations. But it is still early days and the new crop have not even been planted. Another relevant question is if potential US imports into Zimbabwe could limit upward price potential for South African current season contracts. Next week, we will look at the Zambia soy complex. Despite a record small soybean crop, prices are relatively low. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
Thank you, Jacques. A huge shout out to our sponsors, Fieldnet Pivot Watch and Collateral Management International for making these videos possible. I'm Dr. Johnny van der Merwe. Thank you for watching and remember to tune in next week for more on the African grain markets.